All right, let's go everybody. Tuesday, April 2nd. Yesterday I sent out the new edition of MMT Trader. I'll say it again. If you want a copy of that, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. Remember, I am the only one who has put together an applied approach to MMT. Take the concepts of MMT and meld that together with a trading and investing approach. Now, MMT gives us the most concise, the most accurate understanding of the function of how the monetary system functions. From that, I can forecast the economy better than anyone from mainstream economics, because the models they use, the understandings that they have, well, they're wrong, okay? And you know, I have been predicting no recession. I have been predicting or forecasting a re-acceleration in the economy. We're starting to see that happen. I told everybody back in November and December when the stock market was correcting, that was a correction. I said that yields have bottomed, all right? So a lot of things, and all of these things basically moving in the direction that I have spoken about, or the direction that I forecast. Now let's talk about, today was a quiet day. Stocks holding. I want to talk a little bit about oil and petroleum markets. Now we have crude oil up 50% off the Christmas lows. Okay, that's another thing that I called. I was telling everybody to buy that dip in oil. Crude oil is up 50%. Now you have to be, and by the way, we just got a little while ago the API inventory report. So that showed a build in crude and another draw in gasoline, another draw in distillate. The gasoline draw was the 7th consecutive weekly draw, and distillate, I believe that was the 4th consecutive weekly draw. You have to understand what is going on there from the standpoint of OPEC production cuts. And I've been following that. I've been posting up and sending out emails with respect to that. Tomorrow we get the EIA report, and as always I will send out my analysis of the EIA report. But basically I have been week after week telling my subscribers conditions are bullish. Conditions are bullish, and we see the market moving up. Now, one thing we have to pay attention to is that, from what I understand and from what I have been reading, the Saudis are targeting $70 on Brent. Now we're almost there. I think today around 69.40 or something, so we are almost there. The question is, what happens above 70s? The Saudis will get Brent to 70, and by the way, that correlates to about 62, 63 on WTI, where we are right now. So the cuts remain in place. The Saudis have the ability to set prices where they want. We have seen that. We saw their production cutting agreement last year when they said enough is enough, we're going back up, and sure enough we went back up. Now they're saying, or it's been reported, that 70 is their price target, so we have to see. I will say this, the speculative position in the oil market is not that high. It has come up in the last 4 or 5 weeks, to be sure, but it is nowhere near the size of the speculative long position that we saw last year in April, or even if you want to go back to last year in January. The speculative long position in crude was way higher, more than twice what it is right now, or about twice what it is right now. So yeah, it has come up. Speculators, hedge funds, futures funds, small specs, they've gotten long the oil market, but not by an extreme amount. All right, so that's something you might want to consider. Commercials are short, by not an extreme degree either, and swap dealers are short. I think oil prices are going to head higher. I think we are going to see an improvement in economic conditions. We saw the other day Chinese manufacturing back into expansion mode. after, what, 4 or 5 months of minor contraction. And by the way, if you talk about the impact of the tariffs, let's talk about that. The tariffs were imposed, what was it, last September? So basically talking 6 months of Chinese very modest slowdown in the economy. What did we go from like 6.8 to 6.5% GDP? And now back in expansion. And a case could be made that the slowdown had nothing to do with the tariffs. I personally think it had to do with bad or counterproductive monetary policy by the People's Bank of China. But anyway, back in expansion mode. So this has a number of implications. Implications obviously for the global economy, China being the second largest, or by some measures the largest economy. Implications obviously for interest rates and the Fed and commodity demand, inflation. If we go back to that oil price rise of 50% since Christmas, that will show up in the inflation numbers as we start to see them now. 35% up in gasoline prices, that will show up in the inflation numbers as we start to see them right now. So we are at I wouldn't even say we're at an inflection point. This has been ongoing. I've been talking about this. This is in my report. Okay, nobody gives information like this. Again, I will say that the data that I look at is not data that is generated from the economy. It is literally the stuff that drives the economy. Literally the things that drive the economy. So while every other economist is looking at numbers 30 days old, a quarter old, I'm looking at the things that literally create the conditions of the economy. In other words, I see the economy before they're even going to see these numbers, which the numbers they're looking at come from what the economy has already done. What I'm looking at are things that drive the economy. So again, go to my website, Pitbull Economics, sign up for a 30-day free trial of MMT Trader. See you tomorrow. Bye-bye.